Hi, and welcome to today's video. Now, a big shout out to the Senko community and Crypto Senko. So I'm a part of that community, which is a great community, by the way, and a big shout out to Senko. Every Saturday evening, there is a what I can call an open mic session. So people essentially bring stocks and Senko then looks at them on a technical analysis basis. On my part, when I'm a bit chance, I try to look at them in terms of fundamentals. So these are most of the stocks that the community had requested one we analyze or that they be analyzed over the days. So there are a few stocks I've left out because I've done videos on them in the past, or they were in the previous request section and you can find the video on my channel. So I mean, if I don't see a cogent reason to review them, then I just don't bother with those stocks. For the foreign stocks, I would be doing those alongside some of the earnings coming tomorrow. So keep an eye out on that. Now to the numbers. First, I'm looking at Honeywell Flour. Now, as you can see, just to run you through the table, you have the most current earnings per share. You have the estimated full year earnings per share, price to earnings ratio, and that's price divided by, in this case, the full year earnings. You have target price. For most of the stocks I'm using is 7 times earnings, meaning I expect that the stocks should trade 7 times their profit per share. Now, there are a few exceptions. For the financial stocks, Regency, Alliance, and Veritas, I use book value because that's a better way to analyze those stocks. Now, for Honeywell Flour, I think Honeywell Flour is the only firm that I use a um, 20 times earnings target price. And why is that the case? It's simply because the last couple of years you've had robust growth. Now, obviously, the firm moved from a loss position to a profit position. So you can't use those numbers because if you're using those numbers, you're going to have a average growth rate of around 200 and something percent. Now, so what I've opted to do is to use a P ratio of 20 times earnings. And so if you take 20 and you multiply by 0.8, you get 16. But even at that, I mean, even if you want to be generous and say, look, I want to use what? I wouldn't use 30 times earnings. Um, so even if you, I mean, I think 20 times earnings is generous. So even if you use a 25 times earnings, what does that give you? Let me see if I can pull up my calculator. 0.8 divided multiplied by 25. I mean, that gives you 20. So it's not far off. But whichever way, I think one would need to see the the first few numbers, H1 numbers, and then one can always come back to reevaluate. I mean, last year they didn't pay a dividend, if I recall correctly. They opted to conserve cash. So if they change their mind this year, then that would be good. So that's for Honeywell Flour. Nascon is pretty much simple. Annualize the Q1 earnings per share, you get about 15 naira in earnings. You multiply that by what, 7, and it gives you about 100 and 405. I think they actually would do more than that because Q3, Q4, you tend to have a pickup in activities, festive season. So I think they could easily do a what, 15.5 times earnings. So if you say 15.5 and you multiply by 7, that should give you about 108, 110. So whichever way you look at it, worst case scenario, I think you can definitely agree that there is probably 20 to 25% more upside with that stock. Transcorp, I have a hold. In my view, I'm using 7x earnings. Estimated full year earnings should be in the 7 naira and 68 kobo mark. I mean, even if you want to be generous and say, I want to use 10 times earnings, I mean, I mean, which is high. I wouldn't do that. But let's even say, for the sake of mathematical exploration, say we want to use 10 times earnings. That's, excuse me, that's 70 naira and all that. Stock is 53 at the moment. How much upside would you have? You probably would have, what, 20 something percent upside. I wouldn't do that. So, but let's see H1, Q2 numbers or H1 numbers when they're out. One can always reevaluate if there are significant changes. Eterna is a sell for me. Capital raise coming up soon, and that's dilution of existing shareholders. So it's but one can always change your mind depending on what Q2 or H1 numbers turn out to be. Regency Alliance Q1 numbers are pending because audited full year 2024 numbers are pending as well. So what I did was to use Q1 25 forecast, which luckily the firm has sent to the exchange. So I mean, if you use those numbers, but the ideal way, and that luckily I have the two firms side by side, the two insurance stocks, is to look at book value per share. And if you're going by, I mean, if you're going by the previous year's number, then you have a book value of about 1 naira and some fraction. Stock is what? Closed today's trading session, 89 kobo. So you can argue there's maybe 12% upside more. So ideally, and probably maybe if I'm chance when the audited numbers are out, one can calculate the return on equity for this firm using audited numbers and then estimate what this year's book value would be. Veritas, my last stock for the video, book value about 1 naira and 7 kobo. Stock is trading at 1 naira and 2 kobo. So I will put it as it's a hold. Right? It's not expensive. It's just 13 kobo above book value. I mean, so if you easily have, if you want to argue that, look, maybe this stock should trade at book value, which I don't agree, but it's not an expensive stock just from this angle as well. As always, please note that this is not investment or trading advice. Do your own research. This is a rudimentary video. Standalone videos may have different valuations and offer better insight into some cases. So feel free to check the channel on previous videos, especially standalone videos or sectoral videos I've done. They may give you a bit more insight as well. As always, have a good day and stay safe.